Good evening. So welcome back. One of the questions a couple people have asked about is the certification program. So Intuit, the makers of QuickBooks, offer a certification test. And it's one of those things that's a test where you work on the computer and you have to do certain tasks. And if you complete the tasks, you pass it. If you don't, you don't. The adult school program is trying to find out if they can sponsor the test, meaning the students who complete the class, if they want to take it, you can take the test and there wouldn't be any charge to it. So I'll let you know how that goes. You just never know. Don't know until you ask, right?
Yeah.
So we'll find out and I will let you know for sure. The way it works, if you do it on your own, is you can buy the exam. It's about $89. Or you can buy it with a retake. It's like $120. So the way it works is if you take it the first time and you don't pass it, you can go back and take it again and not have to buy the whole thing all over again. However, if you do pass it the first time, you don't get a refund or take it a second time. So it's kind of a gamble. But it's a pretty straightforward exam and they just pretty much do the basics. They don't get into anything too advanced. They just go over some certain accounting principles. And if you're interested, we do have a study guide for that. And it just kind of tells you what they're looking for. And then if you pass it, you can claim you are certified by Intuit. And they send you a certificate. So, yeah, beats hopefully having a stick, right? And then in the news today, I don't know if you watched, but the IRS released the new tax brackets. And the tax percentages are the same, but they did adjust the brackets based on inflation. So if you're close, if you're on the edge, you might be in a new tax bracket, which actually, because they moved them up, would be better. It puts you in a lower tax bracket. So it always pays to check that out. So I told you, got to keep an eye on the news. Things are always changing. There you go. So those changed as of today for next year, for 2022. So that's always a good idea to watch on. Let's go ahead and log into your QuickBooks. All right, so yesterday we worked with our customers in setting up different projects for them. So we closed all but one. I still have one outstanding. And there's my project. So the way they work is they are assigned to a customer. The customer is completely responsible for them. So when you look at the customer reports, it will show as a subheading how much they owe or have paid on their project, but it will also show everything they do in total. One of the things you can do is you can do like a special order for a customer. It's a pass-through order, meaning you're not going to tack any profit onto it. And it's going to come basically straight from the vendor to the customer. You'll do this sometimes if you're kind of a special order or a favor, or if it's something that you don't normally stock or carry, but you want to do this just to sweeten the deal on maybe some other items. Then what you can do is bill it directly to the customer from the vendor. Now, it doesn't mean they're paying your vendor. They won't even know who it is, but the system will track them and track the order and then bill them right from the order. But they'll bill them at your cost, not your income. So let's see how to do that. So let's go to our expenses and our vendors. And I am going to create a purchase order for a vendor, just like we always do. So this is my ABC warehouse, the product. I'll pick on flashlights. And I'm going to do 10. You can choose any item, any amount you want. I better just do one because I'm out of flashlights. But here on the right-hand side, we've got customer project. So I'm going to select that project, the anniversary party, and click there. And then save and close. So the only difference is I added the one item as to for whom I am ordering this. So now, just like normal, you can go to your vendor list here. I can create the bill. And then when it pops up, so here's my bill. And then I've got my purchase order to the side here. I can click the add button and it carries it over, and that's pretty standard. The difference though, is you'll see it put down here the customer and the project, so that carried over. We're going to add one more thing. See where it says billable? Right there. Billable and tax. I'm going to tax them too. Because here's the thing. Even if you're doing this as just a straight pass-through, you are going to be responsible for the sales taxes. The state doesn't care how much profit you make. You can make zero profit, but you still got to collect the taxes and turn it over to them. So having tax turned on means we're going to do that. And then billable means the computer is going to automatically set up a bill for the customer. So I'll save and close. So just to keep things clean, I'm going to go ahead and make the payment for my vendor. And the payment works exactly the same. So now here's where things get a little different. When we go to the customer, you're going to see there's unbilled activity. I got $4. Okay, so that's that activity we just assigned to that customer. I'm going to show all my customers. I'm going to click on the unbilled activity, and there it is. So I'm going to click Start Invoice. The reason now it says Start Invoice rather than Invoice is when you click on it, it actually brings up the same invoice system. But you might want to add a few things to it. So here it comes. So here is my flashlight that I sold him or ordered for him. And you'll see it comes straight across to the same amount. Well, my circle's not so good, but the same amount that I paid for it. Now, in addition, I can put something else here. How about some hand sanitizers? I'll do 5. And that tacks it on. Okay, see how that works? Yeah. And then once you have that done, everything else is processed the same. Save and close. Now it shows up as the open balance here, and I'm ready to receive payment. And this just works like before. And there you go. If you look at the payment under your chart of accounts and your checking account, there it is. And it's no different at this point than any of the other payments you received. The ordering process doesn't affect the payments. And like I said, because you're running through your regular system, but what you're doing is turning around and billing the customer directly for costs, then it's still going to be through the accounts receivable system. And that's why I said you can also include the sales tax, but it just won't be any profit. So, I mean, there are times that might happen. It's kind of rare, but depending on your business, it could be common. And sometimes you'll do that as a courtesy. Depending on your vendors, some vendors will not sell directly to retail, to customers. So to use them, you have to go through a registered vendor. So what they'll usually want is a resale number. And there are a number of reasons to do that. One is vendors don't want to be in competition with their customer, the retailers. Because if they sell it, then they'll undercut the people that they're trying to sell it for them. So if they do sell it, they might sell it at list price, and then all their customers will sell it at a adjusted retail price. So like 50% off or something like that. So it's always cheaper to go that way, although the vendor will sell it if you insist. It just kind of depends. What's happened though, that's changed a lot. The line's kind of blurred because of the internet. So now, like with Amazon and with so many sources, you can set up a shop so easily that you can even have Amazon do your processing for you, that some vendors will do it. But again, it's a balance. Can you sell more or make more money selling it yourself than you can without your sellers, your retail businesses that you usually work with? So like Walmart, for example, do you want to undercut Walmart, make them mad? No, not if they're a huge bunch of your sales. On the other hand, if for some reason you're going to have a really cool brand name that everybody's picking up on, it might be worth it. So, forget Walmart. If I can sell more, I'll make more money selling it myself. So it just kind of depends. If you go through Amazon, one of the things that's really interesting to see now is a lot of the products you can buy directly from the manufacturer. So they do set up their own version of a little store there. And then the way Amazon works, the vendor can ship all the stuff to an Amazon warehouse. So like the one they're building in Turlock or even here in Patterson. They'll have all the stuff here. That's why they're so big, is they have the stuff come in. And then the vendor didn't get any money out of it until a sale happens. But Amazon holds on to the products until it's time to pick one. Then it goes out and then it's processed to the vendor, and the customer doesn't even know it wasn't from Amazon. So that's one of the options. Another thing that you can do is anybody can set up their own Amazon store, and that's a good thing and a bad thing, because it's easy and you can sell anything you want. The problem is some people will use it for nefarious means, and they'll sell knockoff things. And what'll happen is Amazon tries to crack down, but it's just like Facebook and all these other things. Sure, they crack down, so the seller says, all right, fine. Oh, that's shut down. I'll just go set up another one. And sets up another one, starts over again, and then waits for somebody to tell on them so Amazon can crack down on that one. And one of the things that really bothers manufacturers now is there's so many fake things out there that they're even using their own labeling, because printers, it's easy to print anything. So the customer never knows it's not an official, whatever the product is. So especially like in sports equipment and things. And then if you're really, really sneaky, there's a place called Alibaba. I don't know if you've heard of that. Yeah. It's like China's version of Amazon, except it's all the manufacturers, where the manufacturers go. And you can buy it directly. And what happens is when a manufacturer says, for example, they're going to make Nike shoes in China. So they do. But on the side, they basically resell them to anybody who wants them. They just can't have the Nike swoosh on them. Then if they're unscrupulous, they can slip on a Nike swoosh. Yeah. And it's basically the same shoe. I mean, really, same place, right? So it's kind of one of those things that it's coming from the same place. There's really no difference except the brand name. And then sometimes quality control. But then a reseller sets up a store on Amazon and buys them directly from Alibaba, cheaper than Nike probably gets them for, and then resells them cheaper online. Or what they'll do is scuff them up a bit and call them used and claim that they have been worn by some famous person or whoever. That's the story. So they get very creative online, and it's buyer beware. So if you ever do run into something where you're not sure about it, check with Amazon, because they do investigate them. Sometimes takes them a while, but they're trying to keep things clean. And just watch. If you read, a lot of times the items will show up and it'll say from other sellers. That means these are people who set up stores on Amazon. They're not coming directly from Amazon. They might pass through Amazon. Amazon might never have anything to do with them, and they're shipping it from their homes. Calling it Massive Warehouse Incorporated. You think, ooh, okay, they must be big, and it's not. It's somebody's bedroom. So that's kind of one of those things you have to watch. It's listed on there. It's not really big, not big letters, but you can tell where they're coming from. So that's one of those things you gotta just have to watch out for. All right, so with that, so that's a way to just kind of do a pass-through sale. So let's do that. Let's do that 3 times. So we'll create 3 purchase orders. For 3 different customers. Receive the items. With the bill. And then pay for them. Then we'll receive the items or make an invoice greater than we did before. They could be equal, then they just balance out. So we'll make it larger and then receive the remaining payments to the checking account. Yeah, so when we do the purchase orders, yeah, it's going to be from a vendor, but on behalf of the customers. Maybe I should say change that. How's that? On behalf of. See that language works a little better. So like I just did before, we have to start there. Oops. So I'm going to create a purchase order. And then down here, when you do the item, you're going to put the customer in here. First one I'm going to use is going to be my project. It doesn't have to be a project, though. It can be any customer. So I got the purchase order, create the bill. Now, to be honest, when you're doing this, this is where it really makes a difference. I could have put the customer's name here at this point and not put it on the purchase order. The thing about that, though, is if you're doing a single purchase order for this customer, it's a good idea to have it on there as a reminder. And then the key is going to be doing billable, and we'll make it taxable. And then save and close. And I'll go ahead and pay it. So now I collected it. I've got it. I kind of tagged it, maybe a sticky note on it. Let's go to my customer. Create the invoice. I'll add over my special order from my accounts payable part. There it is. So I'll save and close. And I'll receive payment. So I'll do that 2 more times. And once again, if you want, you can do them all, the purchase orders at once. It doesn't matter. In fact, normally you would have a lot of things outstanding. So my expenses, those are done now. It's time to go collect the money from the customer. So in this case, I neglected to put my customers in when I did the bill. Well, that's no problem because I can go back and I can add them now. This is that error message I said yesterday might pop up. It says this transaction you're editing is linked up. Are you sure you want to modify it? Yes, because I know it was a mistake not to include it. But because I already paid for it, it's going to do that. So in my case, there's one here I did not put billable. So when I go to my customers, it's not there. So it's not too late. Change it. Get the warning. Yes, I'm sure. There it is. And there's my last one. So when you're done, all your customers, your tallies up here should show $0 in estimate, 0 unbilled activity, 0 overdue, and 0 open balance. Like I said, not all businesses will do that, and sometimes they'll do it on rare occasions. Other businesses will do it all the time. The other thing you can do that we have not done yet is set up a service fee. So you're not extracting a profit on the items if you're doing items, but you're going to do a processing fee of some kind. And that's a possibility too. I mean, one of our students works for a trucking company. They've added on fuel surcharges again, as they did before. And so that way they're not raising their prices, which really makes customers mad, but kind of everybody's used to it. I don't know why they just don't do that. But then what they're doing is adding an additional fuel surcharge for the gas because it's so expensive now. And part of the problem is when they worked out their pricing, they worked it out based on the assumption that gas is a certain amount, not going to go over a certain amount. Well, now it's going up and up, no signs when it's going down. So they got to make their money back somehow, otherwise they'll lose money.
I just noticed that the coffee at McDonald's, their dollar coffee, it's been like that for, and now it's $1. It used to be $1.08, now
Right.
it's $1.30.
Oops, yeah. Yeah, that's the way it goes. That little thing. And this thing's what's 30 cents.
No, yeah, it's just 30
But
cents.
30 cents here, this one, and then the hamburgers are going to go up, and everything else
Yeah,
you buy,
that's what I said. I said, oh,
everything
just
raises.
coffee.
That's right. That's why all the gold commercials are out there. Buy gold; it hedges against inflation. Because that's exactly what happens. And it's the little things do make a difference, because it's like, man, if coffee is going to go up, then so is everything else. In fact, I was reading coffee is expected to jump come January because of, I guess, some bad weather where they grow it. So now it's going to be even more expensive. It's not just inflation, but also it's going to be a scarcity.
Because it's all imported too, right?
Yeah.
None of it's grown here.
Yeah, I don't think any is. It has to be tropical or
Yeah.
something like that. So
No.
yeah, so buy it now and store up. I've heard people already turkey hoarding, like they did toilet paper. Yeah, I don't know. See, one of the things is, because people are expecting in the news, as soon as somebody suggests it, they want to run with it. They want turkey hoarders. It's worse than toilet paper. Well, may or may not be. And what happens is when it's in the news and everybody says, "Oh, well, I better go buy it now," and then they become turkey hoarders. So it's a self-fulfilling prophecy.
Yeah.
So anyway, I don't know if people really want to hoard turkeys, and because they're so domestic anyway, you're not worried about the importation. But it's now a global market. We've been experimenting with eating chicken liver, but for a while you couldn't buy chicken livers, and it was because I guess they were chicken livers and chicken feet, because you put them in stock and it makes a rich bone broth and all. Well, because they've been always sending them to China, because they're used in all their different things they make, that Americans never wanted them. But now with like keto and the bone broth and all that, Americans want them too. So now it's hard to find them because those local suppliers weren't carrying them and they run out. So it's just kind of interesting, the ebb and flow of things. So now, of course, they're making more chicken feet. And I guess they have to engineer a chicken that has 6 feet or something to really make a profit. But anyway, just kind of how that goes. And you are competing against other people around the world who can offer the best price. Domestically is always easier, especially like in California. We're lucky to be in California because all the stuff is grown here.
Yeah.
So we kind of have a hedge that it's always easier to ship locally than to send it overseas. So that we'll get like first preference. But in our Microsoft Office class, we had a couple of people who were involved in the ag department, and they said that when the honeydew melons came in, it was his job to go out and pick and you can do a gauge to find out which is the sweetest. And those were picked and sent to Asia for a premium. Then the rest go into the regular markets. But because they'll pay extra, they get first choice. And that's the way it goes. All right, so we were able to help our customers out, and we did not include a service fee. Any questions on how that works and when you would use it? All right. So yesterday we worked on doing customer credit memos. Well, remember I said that to all of our vendors, we are their customers. And to all of our customers, we are their vendors. So you are both a vendor and a customer. Well, vendors can give you a memo, and you have to, or a credit memo, but you have to record that somehow in QuickBooks, because otherwise QuickBooks won't know where the money's coming from. So let's just say that vendor sends you something that was broken, and they said, don't return it, just throw it away. Oh, by the way, in Amazon, like I ordered, I'll admit it, they were not official Hewlett-Packard ink cartridges, which you're not supposed to do, but I've never really had a problem with them. So I ordered a set, and the yellow was clogged or something, didn't work. So I just sent a little text back, and they said, don't worry, we'll replace it. And so they did. And they replaced not only the yellow, but they replaced the whole set. And they said, I said, do you want me to send it back? And they said, no, don't bother. So it's much cheaper for them to send out a brand new one than to mess with it, receiving the old one and doing all that. So don't ever be afraid to complain, especially on Amazon. One of the things if you deal with Amazon is a lot of the sellers, the independent sellers, are afraid of negative reviews. Yeah, because it really hurts them. And you'll see that when you get the package, you'll say, give us a 5-star on Amazon. And sometimes they even bribe you a little piece of candy or something. And it's just saying, hey, say what a good vendor we are. We sent you a piece of candy. But it makes a difference, because when people are evaluating, especially things like, well, ink cartridges, there's so many places out there that it's hard for any one vendor to get attention. And one of the ways is have a whole bunch of positive reviews with 5 stars each. And it's funny how that works. I read somewhere that even that they did a study, somebody did, and they wanted to find out, how much of a difference do reviews make? Because, as I'm sure you know, you can make up your own review. You can ask somebody to buy something for you as a buddy and give me a good review. So all of a sudden they get 5 stars, even though it was a plant, right? So there's lots of little ways to skirt the system. So they found out that, of course, having 5 stars, the more stars right on the top, helped. That was the biggest help. The next biggest help was 1 stars. Having even negative reviews was better than having no reviews. And the third and the final one was no reviews at all. And they found that buyers tended to incline to things that had reviews, even if they were negative. Yeah, go figure. So like when I buy something from Amazon, I always check out the reviews. And I always check out a negative and a positive, and I have to see a couple of each one before I make a decision, especially if it's an expensive item. But anyway, so that's one of those things. Again, you got to beware, but it's they try to, again, Amazon tries to keep those clean and make sure they're not people making stuff up. Or what's worse is a competitor will go on the other competitor's site and say what a lousy person this is. You shouldn't buy from this person. He's an evil person, right? To try to get you to go and buy from them instead. So there's a lot of that goes on, and you kind of have to work your way through that. But that's the interesting world of being a vendor in this day and age. All right, so we are back here. You should also be able to check your vendors. And all your vendor stats should be clear. So when we create a return to a vendor, or at least a credit, one of the things you may recall for the customer is now you will be responsible for applying it. And as you're going to see, QuickBooks has a habit of automatically applying it. So we'll see, that's a good thing and a bad thing. It's a good thing if the vendor that you're purchasing from remembers it. Not so good because it'll just slip right by you if you're not careful. And what I would suggest is anytime you use it, put a notation on your documentation. But it is 6:51. We'll take a 10-minute break. And we'll come back at 7:01 and we'll get credits from our vendors. And now everybody can Google to see if you're still in the same tax bracket. All right, we're back. So before we get started with getting a credit from our vendors, there are a couple of shortcuts that you can use in the online version of QuickBooks. So we've been switching back and forth, like from expenses to customers over and over again. Here is a trick that you can use. So if you're using, it has to be a Microsoft compatible computer, and I'm using Firefox. Not all browsers will do this, not all computer systems will. You can kind of do it with Apple if you use the command key. But see how I hover over sales? So I'm showing expenses here. When you hover over sales, I'm going to right click on the mouse, and you should see this. And your options are open link in a new tab, open link in a new window, open link in a private window. If you do it in a new tab, it will put a tab at the top with customers. If you do a new window, it'll get a whole new screen. And if you do a private window, you have to log in again. So I did it, if you see at the top up here. Then it loads up. Right up there. So there's my customers. If I click on it, now I'm looking at my customers. I could do the same thing at any point from my vendors. Right click, open a new tab. And now at the top, I've got customers, and a second here, it'll show vendors. So because you're using one file, it doesn't matter if you use this tab for customers or now my customers tab. And when I click on it, it shows that customers and then vendors. And you can bounce back and forth. Here's the drawback. Like I said, you could also do this to open windows and flip back and forth in the pages. The keyboard shortcut, by the way, so I'll do that. Let me do, I'll do this one in my accounting, my chart of accounts. So I right click on it and open a new window. And then what happens is it's going to open a new window and overlay my other window. And then I can view register. And I can leave this open. And then when I come back and switch back and forth, I can just refresh this and I keep my checking account open the whole time. And then switch back to, oops. That's not what I meant to do. And switch back and forth. If you open up two windows, like I have here for my checking account, the keyboard shortcut is Alt, hold the Alt key down, and press Tab. And that'll bounce you back and forth. And one tab takes you back one window that's open. So if you have more than one window open, you can thumb through all of them. Just hold the Alt key down. And depending on your keyboard layout, see mine, it's right here. So you have two Alts, it doesn't matter which one, if you want to use left hand or right hand, and then the Tab key. And I'll bounce back and forth. The downside of doing this is the more windows and the more tabs you have open, the slower your computer can run. But for most computers, they can handle it. My problem is I like to keep way too much open all the time, and it does slow things down eventually, but you'll see it. And then the deal is, if it does, just close a couple and I'll speed it up or restart your computer. So I'm going to close this one. But if it's something that, two things you do a lot, you can keep them open as separate windows. If you're on the tabs, oops. and you just want to switch between tabs, control page down, move you to the left, control page up, pardon me, control page down moves to the right, control page up moves to the left. So you have to hold the control key down, but then you can thumb through the tabs. You have to have a tab open for this to work. But there's the control, and there's the page up. And again, you have two controls, you can use either one. And there's the page down. So wherever it shows up on your keyboard, each keyboard is a little different, but that'll work. So that's a keyboard shortcut. I like them. Partially because I don't like to take my hands off the keyboard to grab the mouse. But even if you use the mouse, you click on the tabs at the top and bounce between all of them. You can close any of them as long as you keep one open. And having done this, I've accidentally closed this window. If you open it up right away, you don't have to log back in. It'll pick up your current login. If you close it accidentally, close the whole window, and I'm guessing it's like 5 minutes, maybe even 3, and you try to open it up again, you just have to log back in. It's a security thing. But if you do it right away, you can beat it. So anyway, those are a couple options. All right, so let's go back to our vendors. So now we're going to have the situation where the vendor is going to give us a credit. And on the short list, you won't see the option to do it here. This is one of those that you have to go up to the new window. Go to vendors, you'll see vendor credit. So again, this is only the circumstance where the vendor is going to give you a credit for something that broke. They can even do it to make amends. It's just like yesterday when you were doing it for your customers to try to keep them happy, they're going to do it for you. And once again, if the vendor has somebody who's working for them that's doing things they shouldn't be doing, they might be generating one of these and say, hey, Dan, tell you what, I'll sell you $100 credit for $10. You know? I've never had that happen, but I'm sure it's possible. Okay, so the way it works, it's going to be exactly like our credit for our customers, except it's going to be through the vendor. And it's going to be our credit this time instead of us giving somebody else credit. So you can pick your vendor, any vendor, and go to ABC Warehouse. And again, you'll see the two sections here. So we've been using items, and that's what I'm going to do now. I'll pick a batch of 10 tire gauges. Give everybody the wrong readings. But you also got up here the categories. So you can use that if you are applying just a dollar amount. And then you can incorporate an account number here. We're not going to do that. We're just going to go basically on a returned product or a product that was defective, and we're tossing it. So we're not going to worry about the returns. So it's going to be based on the items. Now, the billable and tax, we're not going to bill it because it's a negative. And we didn't pay tax because remember, only our customers pay the tax on these things. So we're going to leave that alone. It can be more complicated if this was a customer's order like we did earlier today. Then, what happens in that regard? Well, in that regard, you're basically, you can use this to refund the customer, but mostly you'll probably handle the customer separate. So even though it gives you the option here, you really wouldn't do it here. Just because, the way customers are, it's kind of, they're the two separate sides that rarely meet. All right. So I'm going to save and close. And now you'll see I have a credit for one of my customers. Vendor, ABC Warehouse. So I got negative $21. So here's the thing. It's just going to sit there until I buy something. And then the options are I can buy something that's more than $21 and burn it up. Or maybe I do 2 orders. The first one's $10 and the other one's $15. And that's what it takes to burn up. So it's just going to stay as an outstanding credit there until you use it by buying it. Now, if it's a refund, it wouldn't use this system at all. So just keep that in mind. So let's go ahead and use it up. So even though I've got it there, I'm still going to create a purchase order. So you can see it's just exactly like we did before. In this case, I'm going to buy something different, but it's going to be larger. So here's a $264 order. And I'm going to save and close. And now you'll see it hasn't applied it yet. So it shows my $264 purchase order here, but still my negative 21 there. So when you see it with a vendor, every time there's a negative, it means the vendor owes you. Because usually you pay them, well, this time they're paying you, and they're paying you with a credit rather than cash. So no problem, we're going to take care of that now. We're going to create the bill for that vendor. So I've got my purchase order here. I'm going to add it. And hold on a second. Okay, so there's my 264. And I'm going to save and close. Now, when I look at that vendor, it has an open balance, but it's not the full 264. So it's already assuming I'm going to use my credit on this payment. Well, this is the part where it's convenient, but you just kind of have to keep an eye on it. So I'll go ahead and make a payment. You'll see down below in this payment, it tacks on a new category, a new section for credits. So I owe the 264 up here from my purchase order, but it found that vendor credit for $21. So it gives me my new total up here of $243. Now, if I didn't want to use it for some reason, I can clear it out and pay the full 264 and save the credit for later. But otherwise, all you have to do is save and close. So it's if you're, let's cut it off right there. So if you're used to seeing this part, it doesn't really do any fanfare about, hey, I just added the credit down below. The only way to tell is you can see the difference here in the amounts, and you say, oh, what is up with that? And you scroll down, oh yes, that credit. So save and close. And my ABC warehouse is now down to 0. See how that works? Now, I'm gonna go back to my payment. What I would suggest is, again, the philosophy is you're only as good as the worst person you have to work with on the other end. Meaning, you noticed here that you've got this credit, right? So as you're applying the credit, what I would suggest is sending a copy of the credit memo or whatever you got that officially told you have a credit along with the check if you're paying by check. Or if it's by email, it's a little note. By the way, I applied the credit. So that way, the person on the other end, who may not know much about credits, would say, what? This is short. And then tell you that they're going to start sending you a late fee for paying with $21 short, right? And then you say, no, that was a credit last month, they remember? And then they have to undo things. What'll happen is, so again, depending on the systems they're using, some systems will block a customer, that's us, from buying a certain amount once we owe a certain amount, or if it goes past 30 days or 60 days or 90 days, depending on what their rules are. And what'll happen is if this little $21 credit doesn't get applied correctly, it'll sit there. And unless they send you statements, you'll never know whether they did it right or not. Only when 60 days from now you try to order something and say, oh, I'm sorry, it's blocking you. It'll blame it on the computer, right? My computer is blocking you, and then you have to sort it out. So even though it takes a little bit more effort, just explain it to them like they're 10 years old. Here is the credit that goes with our payment. And then if there's any questions, they can bring it up at that point. That takes care of a lot of headaches later on. So when you're done, you'll see I have here in my list, there's a 243 and down below the minus 21. So they applied the credit automatically. And like I said, you just kind of have to keep an eye on it. Usually, hopefully, you don't have too many of these. But again, sometimes you do. Things happen. What'll happen is a lot of times there'll be a batch that's bad or something, like my tire gauges, maybe the numbers didn't print out. Oh, what good is a tire gauge? It might work perfectly, but no numbers is not going to help anybody. So, they may have replaced them, but then they came back bad again, and they're still working through that batch. So lots of things in business can happen that way. But that's what QuickBooks is built for, to help sort those things out and to keep things straight. So any questions on how that works, and the circumstances? It's basically the same thing we did yesterday, but the roles are reversed. Now we're dealing with our vendors, and we're getting the customer credit. If they have QuickBooks like this on their end, then they're going to do what we did yesterday. They're going to actually generate a credit memo, and you'll see it come over, and it looks exactly like the one we did. And you just keep it as a reminder. And like I said, once you have it in the system, though, in the computer, it'll automatically apply it as you go along. All right, so let's practice that one. So we'll make 5 vendor credit memos. And make 5 purchase orders greater than the credits. Then make 5 payments for the purchase orders. Then we'll do 5 payments and receive the payments for the credits, using up the credits. When you're all done, there shouldn't be any negatives. So I'm going to start at the bottom. Ziggy. So I have to go to new, vendor credit. So I'm using save and new. So I can just do them one right after the other. One more. Okay, so I have my 5 negatives. And now it's just purchase orders greater than those amounts. So a question came up, why, when you do the purchase orders, are the open balances still negative? Because the purchase orders is only request for items. We haven't received them yet. Once we receive them, then we'll owe the value of the remainder, and that will change. So actually, that's where I'm at right now. So I'm going to create bills for each of these. So the question is why, when I have a negative, like this one down here, my $-, can't I just go to payments? Well, again, you have to receive the remainder, and you couldn't write a negative amount on a check anyway, which would be funny if you could, because then you give somebody a check and tell them, here, go cash this. It's for -$1 million. And if they do, then that means they owe you $1 million, right? That would throw everything into a tizzy. So that's why you have to attach it. In our case, we're just doing one greater, one bill that's greater. But again, in the real world, it's not always that easy. Sometimes it takes a few to burn it off. So all my negatives are gone. I'm ready to make payments. And again, there's my credit. All good. There's my payment. Now, can I change this number? I could, especially if I'm mad at the other person and I want to just use $1 each time and do it 18 times. You certainly could. The computer will allow it. How about that? It really wouldn't make much sense. But sometimes there are like certain thresholds. Say, for example, they gave you a discount if your order is $100 or more. And then the fine print says not including any credits for some reason. Okay, then if that were the case, your $100, your ticket credit is going to go below. So you say, all right, I'll only take $2 in the credit now. It keeps me above 100. I get my 10% discount. And then next time I'll take 2 more until it's all gone. So when you're done, all the open bills should be zero and your open balances should all be zero. So as you can see, this works just like our customer credit, but now we're the customer. There is another option on the vendor credit screen, which I forgot to mention, because I don't know when you would ever really want to use this. But you have the option, just like all the others, to make this a recurring event. So if you knew you were going to get a vendor credit for some reason every month, on the first of the month, you could set it up to get a credit for something. So there could be a special circumstance to do that. Again, I'm not sure I'd want it to be a recurring event, but I'd rather do it manually just because it'd be kind of odd to always get money back from your vendor, but not impossible. And I'm sure they put that in there either because somebody uses it and maybe just somebody I'm not aware of, or because they already had the routine done up for all the other screens. They wanted to keep them consistent. So let's plug it in here. Usually though, like I think I mentioned that I worked for Tri-Valley Growers. They always did get a credit from anybody they paid in their accounts payable if they paid within a certain time frame. So like there was 10%, 10, net 30. So they paid a bill within 10 days, their vendor would give them 10% off the entire bill. Otherwise, the net 30 part was if you don't pay it and get the discount, it's full amount due in 30 days. So they always took the discounts, but usually that would occur at the point at which they processed the bill, and you wouldn't have an outstanding credit on it. It wouldn't just float around. But I guess you could set it up that way if you wanted to. But just like with the other screens, like with the invoices and with the purchase orders, you can set it up as a recurring item. Same with our expenses. And theoretically, at least, you could set up all your work as a recurring function and never have to show up to work because the computer will do it all for you. Including with the shortcuts, you can set up a link to your QuickBooks as a startup link and put it in your startup list in Windows. And then when the computer comes on, it automatically launches the browser and then saves you a couple steps. When I worked at Tri-Valley, one person was chronically late. So one of the things he did was when he left the night before, he'd leave his office chair out. Instead of tucked in, it'd be out. And if the custodians didn't move it, they left it. he set his computer to come on at 7 a.m., which is when he's supposed to be in. And then he set up in the way it turned on, he had shortcuts in the startup routine. So it opened up some windows on his screen. So anybody walking by would see the chair out, see the computer up and think, oh, he must be in the bathroom or he's getting a cup of coffee and assume he's there. And then if he rolled in late, oh, how long you been here? Oh, I've been here all morning, that kind of thing. Again, too clever by half. All right, so that's how you can incorporate your vendors just like you did with your customers. And let's go back and take a look at our sales. And click on products and services. So I'm going to take the first item on your list, and in my case, it's going to be flashlight, and we're going to edit this. Now, when you set up the items, one of the options you have is a reorder point. So down here on my flashlights, you'll see I currently have 18 on hand, and that calculations from my inventory. Currently none on purchase order. I'm not waiting for any of them. But then I have this box in the middle, the reorder point. The reorder point is the point at which you want a reminder that you're running low. So that way, hopefully, you don't run out. So I'm just going to make up a number and set it to 5. Now, how would you really calculate this number? It's an art form. You basically can look at your flow of, like in my case, the sale of flashlights, and say, I noticed that when I order them, it takes about a month for them to come in. Okay, and that's pretty average, just plus or minus a couple days. So it's pretty close. Well, I notice I am selling 5 a month. Okay, so I want to know if it gets down to 5, to send me a note, QuickBooks, tell me we're down to 5, because I'll immediately place an order. By the time those run out, I'll get the next group in and we'll be all good. So that's kind of a guess. Now, what happens if I'm wrong? On the one end, we'll have too many flashlights, which is, what are they, $2 or $3? That's not too bad. But, if you're selling cars, that could be a huge thing. On the other hand, if you're wrong and you sell more than you expected, then you'll end up selling them too fast and you won't get them in time. So that's, even if you set these reorder points, it never hurts to go back and just check the flow of things and how are things going. If you see an uptick all of a sudden in flashlights, it's a good idea to change that reorder point or place an extra order. And then the other side is the supply chain. If you find that the vendors, all your stuff is slowing down for whatever reason, then you can adjust this too, and it'll give you a reminder. So maybe I want to put in a few more, like 10. And that way it gives me a little lead space. That's 2 months worth of sales. So it doesn't actually change your quantities on hand or anything else. All it does is just set up the reminder system for you. And like I said, you can rely on it. It can be pretty close, but it never hurts to keep an eye on these things. So I'm going to go to my next one, my hand sanitizer, my second item, where it says edit. I'm going to run report. So the quick report will show everything that's been happening, including my purchasing of this item and my sales. There's another report here under reports. So I'll click the reports tab. And you should go down to sales and customer. And you want to find sales by product service summary. It always will say product and service because it's assuming you might offer a service at some point. But even if you don't, it's the same report. And this one excludes your purchases and includes the sales. So there's my hand sanitizer. And it shows I have sold 108 from November 1st to November 10th. Okay, well, I said, or I figured out that it takes me a week to get these reordered. So how much do I sell in a week? So I'm going to change the dates up here in this report to go from 11/3 to 11/10, including today. And then I'm going to click Run Report. I get the same layout, same stuff, but now I can see, oh, it's 108. Okay, so I'm selling about 108. So let's go back to our sales and products and services. And I'm going to edit the hand sanitizer. And my reorder point is going to be 108. So it gives me a week lead time, and that seems to be pretty effective. So we'll save and close. So if you want to do that, you're welcome to go do the numbers, or you could just make them up whole cloth. For us, it doesn't matter. Just know what they're in there for. The danger of using reorder points too heavily is there was a system by a guy's name is Deming, and he actually went to Japan. He perfected it there, and then it became a really big thing for a long time. And it was called the just-in-time ordering system. And ideally, you would buy just the stuff you need when you need it. So you wouldn't have a storeroom or a warehouse because a lot of companies spend a lot of money stacking stuff up. Well, if you need 5 parts to make an item and you got plenty of 4 parts, but on one you run out, you can't make the item. It doesn't matter how many of the other parts you have to have one of each thing, otherwise you're stuck. So the computers can help with that. They can do what we just did. You say, all right, here's how many we use, here's how long it takes to get them. So if those things are true, here's when we need to reorder them. The big flaw comes in when, like, you had, was it a FedEx strike once or a UPS strike? And all of a sudden, all the stuff that was shipped by them that could be on their trucks, they're not going anywhere. And if you need it in 2 days, otherwise you're stuck, then you're got a big problem. And that's one of the reasons now with all the cars, new cars are being held up because they don't have the computer chips. And you think, couldn't you just build it without the computer chips? Not anymore. Everything's computerized in that car. So it takes a lot of chips and they're stuck. They're scrambling, trying to create more chips, and it's an uphill battle. So that's why cars are so expensive, even used cars now. So if you want to sell your used car, now's the time to do it. The problem is finding a replacement. All right, so let's go ahead and we'll put reorder points on each of our products. If you want to do a little analysis, you can, or just make them up. Now, the reorder point can be higher than the quantity on hand. Like I got 23 of these, I could put, or 22 of these, I could put 25 or 30. What'll happen is it's just time to reorder, but the reorder point stays in there as a reminder later on. But I'll make it lower. But the reorder point can be any number. It could be 1, it could be 1,000,000. not sales, tire gauge. So on my tire gauge, I did make my quantity for the reorder point greater than the quantity I have on hand. And sure enough, here it is, low stock. And I say, oh, I am low on something. What could it be? I shall click on it. And there it is. And you'll see it even comes up in red. Quantity on hand is 43. I set the reorder point at 52. Now time to reorder. The convenient thing is, even though I'm in sales, I can click on reorder here and it will jump me over to the purchase orders. So I can do it right now and be done with it. So see how those work? So they're completely optional. Not every company will use them. Some companies won't use them because they don't know about them and haven't thought about it. On the other hand, not every product has to have one. And if there's a particular product, for example, like Apple products are terrible about this, is they do run out. And when they run out, they're hard to get. So you might want to order extra and put a higher reorder point. So you'll know when you're getting even down to 100 new iPhones, order them anyway, because it takes Apple that long to get them to you. I'm going to cancel my purchase order. I'll do it later. Any questions on how those work? I knew somebody that's her primary job was checking reorder points on the computers. And it was a huge report, came out like every 2 days. And she had to go through it. And even though the computer was supposed to do it, she'd still catch things that hadn't been reordered for whatever reason. Or what'll happen is just because they're ordered doesn't mean they're actually coming in. So you could have 2 or 3 purchase orders piling up because the computer says, order these. Okay, we ordered them, but they didn't come in. So we do another one. Order these. Okay, we ordered them. So there's another one. So that was her primary job, was check that. This was at the labeling plant, and it was just because if we run out of labels for that product, we're stuck. All those cans are canned and ready to go, but they can't be shipped until those labels come in. So that was a very important job and very painstaking, but if you're good at it, you get used to it. She was pretty good at it. So the computers are great, but it still needs a human to keep an eye on them. All right, well, there's no questions of that. We are done for the day. As a reminder, tomorrow is Veterans Day, so we won't be having class, but we'll be back on Monday. Monday, we're going to start working with our payroll, which is always fun. So I just cheated. Rather than reordering them, I lowered my reorder point. Well, I mean, that's right. I mean, that's the other thing too. So you can set the reorder point. You can always go back and change it. And that you'll have to do that if you say, all right, my system's not working. We're getting a backlog of flashlights or whatever. So, okay, I'm going to change the reorder point and lower it. Of course, then all of a sudden you get the big rush and you run out. It's more of an art than a science.
the weekend.
Well, thank you. You do the same. We'll see you next Monday.